we will have to print excessive amounts of brand new dollars right at a time when the Federal Reserve is giving up on the fight against inflation. I've been talking to you guys about this weakening economy for quite some time, likely decades, and the only thing that's changed between then and now is that now it's gotten excessively worse. Everything is setting up. I'm just telling you what I'm seeing. We're going to take a look into GDP, China, and Japan. We're going to talk about unemployment, all sorts of things, putting it together in one big picture about this last gasp economy. You help yourself and myself and other like-minded people as well when you help spread this video by clicking on the like button. That's all we ask, and that's really appreciated by our entire team. So here's the issues with the financial condition of America. And of course, you know, and your neighbor knows, and your boss knows, and the whole government knows that we've got too much debt, much of it generated during the time of low interest rates, where it was easy to borrow a lot of money. But instead of fixing the problem by having proper fiscal responsibility, which would be painful and no one would ever be able to put that through because it would be so unpopular, but that's the way to fix it. So we're just left with this problem that's still there, hanging above our shoulders, and this vast, unspoken, widely held belief that we are being crushed by this debt and it's going to actually eventually explode in the Great American Debt Bomb I explained to you. So if you use logic, you'll know that the debts either get paid or they don't. We can't pay them, so then they don't get paid. And every debt has a counterparty, so the money is owed to someone. So those are the people getting stiffed. And we'll talk about it in this video, but how much of that percentage is actually on your shoulders right now. And they could avoid a default if they just create all sorts of new money. And we're going to get into this video and I'll explain to you where we're going to see double-digit inflation as the government handles these massive debt loads by defaulting through monetary creation. Of course, there's plenty of opportunities too. That's what gets set up when there's all this chaos. The more moving parts and things crashing together, the more opportunities there are there. You just need to know how to find them, how to see them. That's what we talk about in the financial newsletter I have for you. We recently hit $1 trillion in interest being paid on the federal debt. That's just the carrying cost to handle this debt, just like on your credit card. The data in this is from the Bureau of Economic Analysis. This chart is provided by the St. Louis Fed. And you can see that we broke over the $1 trillion just to pay the interest on the credit card. So what options do the Federal Reserve have? They're going to let inflation run away. They're going to have to, because if they raise rates more, it puts a lot more strain on the government itself, the entire economy, which is the purpose of it. But they were saying the economy is so strong, so they're fighting inflation. They realize now, wait a minute, Peter Leeds was right this whole time. But in the meantime of all of this, there's the government running an operational deficit every year, and it also broke over $1 trillion. For the first half of 2024, the government is running a cumulative deficit of $1.1 trillion so far in fiscal 2024. That's $46 billion more than the same period in the prior fiscal year. Here's a chart of the trade deficit from the Bureau of Economic Analysis. This is the U.S. international trade in goods and services for March 2024. So the trade deficit just adds to the debt every single year, every single day. But what about all the taxation revenues? Doesn't that pay for all these things? This is from taxpolicycenter.org. These are sources of federal revenue. But there is a bright spot on all of this, and I just tell you what I see, and so it happens to seem like I'm a doomsayer. But that's just what's happening. But there's a big bright spot in all of this. Listen to this. This is from Supply Chain Brain. It's about manufacturing. After several decades of progressive offshoring of operations to save on labor costs, U.S. and North American manufacturing is progressively coming back home. There are varied reasons for the shift, including geopolitical shocks, wars, increasing labor costs, and a deteriorating trade relationship with China. And a little bit later in this video, we're going to talk about sanctions being put on China. While full revitalization could take decades, the resurgence is happening and is evident not only in the U.S., but in the manufacturing sectors of Canada and Mexico as well. So we had all this offshoring, and now the trend seems to be onshoring or reshoring, coming back to America. good news, huge for the health of the economy. That's the first positive thing I've seen with this economy in quite some time. So that's very good, but it's going to take quite a long time. In the meantime, what are we going to do about this ongoing operating deficit? Maybe you're one of the people who thinks, well, we'll grow our way out of it. Politicians love that phrase, we'll grow our way out of it. This is from Trading Economics and the information from the U.S. Bureau of Economic Analysis. You can see the GDP growth rate. That's how fast it's growing. But as you can see from this anemic growth rate, it's very low. It would need to be a lot higher before it's ever going to be even worth talking about on a video. So what have we been doing all this time? Because this deficit's been going on for quite some time. We always would borrow money from China and Japan. Check out this chart. This is from USA Facts. Nearly half of U.S. foreign-owned debt comes from 5 countries. And Japan and China used to be the big financiers for us. They would buy our treasury bonds. We'd use that money to buy weapons. But they are slowing down in terms of their voracious appetite. They're not only not buying anymore, they're actually lightening their load. And it's not that they're weaponizing it. People will tell you that China's weaponizing the debt, and they could do that, and it wouldn't be in their best interest either, but that's for another time. China right now has all sorts of problems that you guys know about because we talked about it on this channel. Housing, the stock market in China, and a lot of money flowing out trying to get into Bitcoin and gold, which we're going to talk about in just a second in this video. And China's currency is very weak right now, so it makes it harder for purchasing expensive US dollars with less valuable Chinese renminbi or whatever they're using. And Japan as well also has their own problems. This is from Marketplace. Most of our government debt is held domestically. Only about 30% is held abroad. But about a third of that is held by China and Japan, which comes out to a little more than $2.1 trillion in U.S. treasuries. But 30% is held foreign, 70% is held domestically. Who is it owed to? Who is the counterparty in that? When you figure out who the counterparty in that, who's going to lose out on this is, then you'll understand why I'm always talking about this. So if we can't borrow the money and we can't generate it through taxation, there's only 2 options. There's actually 3, and I'll tell you the third one first because it's so preposterous that as I explain it, you'll realize why it would never ever happen, so it's not worth talking about after this moment. That would involve truly fixing these issues by having draconian cuts across the board for services, massive spending cuts across the board, the elimination of massive numbers of government workers, all the while you're rolling out these massive operational efficiencies while spiking taxes again and again. So let's put that solution, the actual cure to the problem, put it aside. It's never going to happen. So that leaves us with what I wanted to say originally, only 2 options. Either we default, meaning we don't make the counterparties whole. People who are owed money don't get that money. You don't pay somebody what you owe them. You're only paying them a portion of what you owe them, or you pay them at a time when it wasn't when you said you were going to pay them. All of those are defaults, not to be confused with all the bankruptcies and layoffs that we've been seeing here. Not to be confused with the spiking auto loan delinquencies, which are on the rise pretty strongly. So either we default or we choose the simple, easy, always works path that is going to make everybody whole. The politically expedient path. Monetary creation. The only way to pay for half of what we spend is by creating new money. They'll print money and it won't work, and they'll say, oh, we didn't do enough, they'll do more. But the point is it will never work because they're not fixing the problem. Just like with quantitative easing, or say a better example, the government shutdown. They don't fix the problem, but they act like they fix the problem. Everybody believes they fix the problem because there's no point in paying attention to this stuff. But if you accidentally pay attention to it, you realize that all of what I'm telling you is happening. It's not going to be a good path ahead. With all this monetary creation, congratulations to you if you own a house, because your $200,000 house will become worth $400,000. But you'll also say, how come this $2 loaf of bread costs $4? Why does this can of soda cost $4 now? Your house is worth more, some of your stocks are worth more, but you're not actually gaining. You're just sort of treading water, swimming around in the foam on the beer. When they come over the top with a big bout of new monetary creation, even more than they've already done, which I didn't even realize was so possible, that anyone would actually be so stupid to do this. But the outcome of all of this is something I like to call double-digit inflation. And when that bout of monetary creation doesn't work, they say it wasn't big enough, and they come over the top with an even bigger amount, that's when you might get into a little bit of hyperinflation. I'm not saying that. I'm just saying if you're ever going to get into it, it'll be then. 50% increases in prices on products per month. That's hyperinflation. I don't think we'll get there, though. We'll just come close. But what is this all leading up to? It's leading up to what I've been telling you about for a while, the recession. And I believe this is going to be a consumer recession. 70% of the American economy is consumer-based, consumer-driven. Consumers are feeling the strains right now. They're going to start cutting back. They'll have no choice because they're still paying out the same amount of money because everything costs more. But this consumer-driven economy can put on the brakes whenever consumers stop opening their wallets. And then you get the recession, and it changes everything that we talked about in this video. It just, whatever you're seeing, it's a little bit worse. The recession will spike unemployment, but then let's talk about China. Because now, there's talk about U.S. sanctions on China. But what is China the world's top producer in? You probably don't know this. I hope you don't know it. I'd like to tell you something new. It's actually the top producer of any country and how much gold they produce. They dig it out of the ground. At the same time, China is also the country that imports the most gold. Let that sink in. All of this gold wealth, which is true wealth, held in gold, is moving to Asia from the West. People don't remember or understand what gold is. That's why I'm shouting on the rooftops about this. But while China's digging up the most gold and bringing in the most gold, what are the people in China doing about gold? Well, look at this. 4 times as much buying. They're going crazy for gold in China because they understand the value of it. Especially when their currency and when their real estate market and their stock market have all been under a ton of pressure. They are going to gold. You don't have to wait till that all happens. You don't have to wait till that all plays out before you can go to gold. You go down to Costco right now and buy a gold bar. I looked into those. They're actually good quality bars and the prices are okay. But we were spoiled because we had the reserve currency. Everybody loves the US dollar. Here's a chart of the reserve currencies, and you see that it's not that if you have the reserve currency, it's a birthright. If you have the reserve currency, it's a phase of time. Our phase of time as a reserve currency is at the end. So as we start losing the reserve currency status, albeit very slowly, and China is digging up and importing and buying the most gold, along with all the other BRICS nations who are going to have a gold-backed currency. India's buying gold, Russia's buying gold. Their new gold-backed currency, in my opinion, will likely become the new world's reserve currency, at least for that portion of the world. About 50% of everybody on the earth could use that as the reserve currency. It's just an agreement or a decision. Iran can say, hey, Russia and China, we're only going to use this now. And they all say, yay. And then that's what it is. They're going to be using the new BRICS currency, as will a massive portion of the world. So as our GDP struggles along and we go enter into a recession, that's going to push unemployment rates higher, which will then further reduce the already insufficient taxation revenues. For every dollar in expenses that the government spends, you're only covering 50 cents on every dollar from taxation revenue that you send in. We will have to print excessive amounts of brand new dollars right at a time when the Federal Reserve is giving up on the fight against inflation. That all spells double-digit inflation, and it's all beneath this big umbrella of this massive American debt bomb. That is a summary of this last gasp economy, but there will be a last gasp. I don't know when it's going to be, but it's certainly going to be soon. And I'll say again that I don't believe that either you or I understands how difficult this is going to become financially, because this is uncharted territory. Nobody knows how this is all going to play out, but I'm sure at some point it will involve a digital currency. We'll keep an eye on it for you. Subscribe to the channel. The Peter Leeds newsletter is one of the most popular financial newsletters on the planet for a reason.